Hey everyone, PepsiCo reported fiscal year 2024 second quarter earnings results that could have big implications not just for Pepsi stock, but for the broader market. I'll share with you what detail I noticed from Pepsi's earnings report that signals a big change for consumers worldwide and in North America especially. After I review PepsiCo's earnings results, I'll update my buy recommendation for PepsiCo stock. Coming into the quarter, I had the stock rated as a buy, and I'll update that recommendation and let you know if I still think it's a buy following these financial results. So let's take a look. I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now. All right, so PepsiCo reported organic revenue growth of 1.9% in the second quarter, and earnings per share growth of 10%. Year to date so far in the first half of 2024 for Pepsi, it's delivered 2.3% organic revenue growth with 9% earnings per share growth. I think the company has done a great job keeping costs under control while revenue growth has slowed down amid changing consumer behavior. Management noted that the business delivered net revenue growth, strong gross and operating profit margin expansion, and double-digit earnings per share growth while remaining agile despite facing difficult net revenue growth comparisons versus the prior year. So that difficult comparison versus the prior year is the change in consumer behavior. In this time, 2023, consumers were still spending a little more time at home. The economic reopening was still gaining momentum, and it's reached a peak here in 2024 in terms of consumer spending away from home. People were still working from home a lot more in the same quarter last year. And in the same quarter last year, government benefits, government stimulus were still elevated compared to the same quarter this year. So all of that made last year's second quarter revenue much better. And comparing against those better results are difficult to do. Still, despite those difficulties and despite those tailwinds which turned into headwinds, PepsiCo still delivered 2% organic revenue growth. Management went on to say that they will further elevate and accelerate their productivity initiatives and make disciplined commercial investments. This part is key here. This is code. This is code here. This is business code. Pepsi communicates with its competitors like Coca-Cola and Dr. Pepper through these types of statements here. When PepsiCo says that they're making disciplined commercial investments, that's code for we're going to keep things under control. We're not going to go after market share. And so if you're a rival like Coca-Cola and Dr. Pepper, you listen to this and you say, oh, okay, that's good to hear. We'll also do that because we don't want to increase competition within ourselves. Because if Coca-Cola, PepsiCo, Dr. Pepper, and the snack businesses compete against each other, they're going to bring down their profitability. It's going to be good for customers, but not good for investors. So this is code here telling its competitors, look, even though our revenue growth is slowing down, we're not panicking. We're not going to make these big promotional plans to try and take market share, to try and accelerate revenue growth. We're going to be disciplined. We're going to try and work on the edges here, get better at what we do, execute better, and try and do better for ourselves. We're not really going after your business. And that's good news for investors. That's always good news for investors. I highlight that competition is one of the things I try to avoid as an investor. When I look at industries that are highly competitive and increasingly competitive, for example, the electric vehicle industry is one that I've been famously against because of the heightened competition. And it seems like every other week, there's an announcement of yet more supply, yet more models of electric vehicles, more price cuts, more promotions, etc. And that's all bad news for investors because that's all those electric vehicle companies competing against each other, trying to take that market share. And this is the opposite here. So I like this type of strategy. They're going to focus on surgically providing optimal value propositions with certain portions of their North American convenient foods portfolio. And keep this in mind because this is the big change I noticed that I highlighted earlier in the video. The North American consumer is finally saying no to price increases. They're finally saying no more price increases. If you increase the price, I'm going to stop buying. And this is a change. This is a big change. I'll talk a little more about this a little later, but this is a big change from the North American consumer, where up until now, for the last 3-4 years, the North American consumer has just been saying, it's okay. You want to raise the price? We'll keep buying. You want to raise the price? We'll still buy. Raise the price more? We'll still buy. But now they're finally saying, enough is enough. We're going to slow down. In terms of the rest of the year, PepsiCo saying they now expect to deliver 4% organic revenue growth, whereas they previously said at least 4%. Now they're saying approximately 4%. So this is a downgrade in their overall revenue outlook for the year, ever so slightly. And they now have a higher degree of confidence in delivering at least 8% EPS growth for the full year in 2024, at least 8%. And if you look year to date, they've already delivered 9% earnings per share growth. So at least 8%, they're more confident now because they've already done 9% in the first half of the year and 10% in the second quarter specifically. All right, I highlighted that I would talk more on the big change I noticed, and it's right here in the fine print and details here. If you look at total net revenue change for PepsiCo year over year in the 12 weeks which ended June 15, you'll notice that they increased prices by roughly 5% year over year, roughly 5% total. And you're looking at across its product categories, across geographies. And that 5% increase in pricing resulted in a 3% decrease in organic volume, meaning people purchased 3% fewer PepsiCo products year over year versus last year. Okay, so they finally said, you know what, you're raising prices, we're going to buy less. And this is really the start of this trend, because prior to this quarter and perhaps the previous quarter, consumers were just buying regardless. PepsiCo has been raising prices for, I want to say, over a year and a half now. You've seen continuously increasing effective net pricing for PepsiCo. And if you do your own shopping for your household for groceries and you went into the supermarket, you will have noticed those price increases for PepsiCo's products. But finally, consumers are pulling back. And that's a big change this year. As the year has progressed. The year started off as consumers, staying robust and buying more despite price increases. But finally, consumers have said, enough is enough. We're not buying that much more. And that trend is even worse in North America. You noticed negative 4% in organic volume, despite only 3% price increase. So a more sensitive consumer in North America for Frito-Lay and for PepsiCo beverages as well. 5% price increases led to 3.5% declines in organic volume. So finally, after all these years of price increases, they have reached the limit, and management said, we're going to stop raising prices. We're going to focus more on different value ideas and those kinds of things. And this has implications for not just PepsiCo, for broader market participants. Businesses worldwide are taking notice, and it's not only PepsiCo that's noticing consumers are becoming more price conscious. The economy is slowing down, growth is slowing down. Inflation came out today, actually negative month over month, and that's a sign that the Federal Reserve is more likely to cut interest rates at least one time this year. Now, PepsiCo is trading at a forward price to earnings of 18.64, which I think is a good value for investors for PepsiCo stock. So to answer the question I posed in the beginning of the video, is PepsiCo stock still a buy following these earnings results? I say yes. I still think PepsiCo stock is a buy, and I'll update this recommendation here on July 11th. Before I let you go, let me tell you about the greatest deal on YouTube. With just a click of a button, you can get free financial analysis from a professor with decades of investing experience. So what are you waiting for? Hit that subscribe button, and I'll see you again soon.